What's up, everybody? In this video today, we listened to a Bitcoin OG who has been in the space since 2012, who is going to try to make a case why Bitcoin can increase in value 625 times from what the price is today, right? So if you think you're too late or to buy into Bitcoin, you are not. You are early, trust me. Stay tuned to the very end. I'm going to go over a chart that he made that shows you exactly how he believes Bitcoin can achieve this in much less time than you would ever work on like a retirement plan or something like that. All right, check it out. Welcome back, everybody. So in the intro, I told you about this Bitcoin OG who's been in the space since 2012, full time, believes that Bitcoin could hit a price over $5 million, actually like 5.7 million, within the next 9 or 10 years. Okay, so I'm gonna start off by telling you a story. And the story is that in 2000 and I think 13, 14, there wasn't a whole lot of places to buy Bitcoin back in the day. So I used a service called localbitcoins.com. A lot of you probably have heard about it. And it was the best way to buy Bitcoin or sell Bitcoin peer-to-peer. You know, I often went and met up with random strangers and gave them handfuls of cash and they would give me some Bitcoin or vice versa. And it was a great way to get in and out of the market without having to give up personal identification. You know, you can be totally anonymous. At least from an identity perspective, and this was great. And then they started innovating, and they had online ways where you could do wires and bank payments and gift cards and things like that. And and then last year they started doing KYC. And I don't like to do KYC, right? It's kind of like the antithesis of what Bitcoin and cryptocurrency and blockchain is meant to be. So I'm gonna check out this first story, and I'm gonna build this case for you, okay? So Paxful flippins local Bitcoins as the largest P2P Bitcoin marketplace. So Paxful is something that I started exploring once local Bitcoins started making me do KYC. So if you go down here and you look at this chart here, that we see on Twitter from Arcane Research, and let's just open it up. So you see here this, and Paxful is a good company, right? So they started having some growth, from marketing and just being an alternative, and kind of having some other services that local Bitcoins didn't. But look at this response: new KYC requirements on local Bitcoins. Boom, that's exactly where I was when I dropped off. And boom, all of a sudden we see Paxful taking the lead. That's what I like to see, right? So what we see here is a shift, right? And people are like, I don't want to give up my personal identification. I don't want people knowing if I own Bitcoin or not. I don't want people to know my personal wealth, right? So this is really interesting. So the next one we go into is look at this growth in the usage of decentralized exchanges. I like to see that, right? So when I first started using decentralized exchanges, this is like, a while back, and they were just horrible, super slow, no liquidity, like you just couldn't use it. So there really was no other choice in town other than centralized exchanges. But as I told people, it's just a matter of time before they start innovating and liquidity becomes ample and user interface is sleek and friendly, and it's just a better method. It's more efficient. It's safer safer from hacks. It's the saying, not your keys, not your crypto. On decentralized exchanges, they are your keys the entire time until a transaction happens, and then the swap happens after the transaction is executed. So you don't have to risk all of your assets sitting in a hot wallet of an exchange liable to be attacked. So I tell you these two stories because they're extremely relevant in the mindset of people who are learning about decentralization, learning about the benefits. People want to use more efficient and value-creating systems. right? I often give this example of Uber, right? I said Uber is a perfect example of an application that can be decentralized and made more efficient. And I'll give it to you again real quick. Let's say that I want to get a ride to the airport, from my house to the airport, and in Uber, it's gonna cost me $100, right? And in this drive, maybe the driver gets to keep $70 of that, and Uber takes 30. So in a decentralized version of Uber, let's call it Duber, for example, that same ride to get to the airport from my house, and remember, it's going to be the same way, right? Because an Uber, anybody in any car that's approved can go and just log in and log out anytime they want to start work or stop work. And really, like, think about it. How many times have you called 1-800-UBER or whatever to get customer service? Never, right? So there really doesn't need to be a central entity because they don't really service public, right? They're just building code, and that's something that you can self-sustain in an ecosystem. And I'll tell you in a second how that is incentivized. So let's say that same ride from my house to the airport, instead of in Duber, costs me $60. No, sorry. Let's say that same ride in Duber from my house to the airport cost me in Duber $85. And the driver gets to keep $84. And $1 of that transaction goes back to the network in order to incentivize people to, for governance, to work on, for marketing, to work on improving the code base, to work on, to incentivize miners or node operators to secure the network and run the network, right? So in this example, if you open your app and you want to get a ride to the airport, and one is $85, the other one's $100, it's the same service. And the decentralized version has way more options because everybody would prefer to get paid $84 versus $70 for that same service they provide. That is what I'm talking about, the true power of decentralization, right? And it's obvious. When people start to understand, it's obvious. This is what I understood about Bitcoin a long time ago. People told me that I was crazy to think that Bitcoin would ever go to $1,000, right? And when I read the Bitcoin white paper, I understood very quickly the power of the efficiency that it created, the power of the freedom that it created, the power of the mutability that it created, and really the value creation versus value extraction you see in centralized worlds. So let's just go on to the next article. Bitcoin demand will outpace supply within 8 years, right? But by retail users, but we are already seeing in institutional users it outpacing, right? I did the story a couple days ago. You can check it out, one of these links above, about Bitcoin being bought up by Grayscale at 3 times the rate at which it was being mined in 1 week, right? So this is obvious. And another just real quickly, Bitcoin investments are now doubling among boomers. Gen and Gen X. Like, people are waking up. Boomers are buying. Yeah, like Gen X, like, this is not just for young people anymore. Everybody is starting to understand because it is becoming more grandma friendly. And this is what I tell everybody. We need crypto and blockchain and Bitcoin to be grandma friendly. We need to be mature, and we're getting there. People have been impatient. Just chill for a minute. All right. So now I'm going to go into this model that a lot of you have seen by Plan B. This is the stock to flow ratio model. And it's been pretty damn accurate so far, right? So we see here on this rainbow line, the price of Bitcoin. And this line, these lines that go like this purple one is basically stock to flow, which means the rate at which a commodity or an asset is introduced into the world and the demand for it, right? So it tends to go up quite a bit, about a year after a halving. But what I want to talk about here is where we see in 2015, the price is around $100. In 2020, it's around $10,000. 2025, $100,000, and 2030, probably $1 million or more. I actually expect this to see an exponential curve at some point, right? And I will get into why I expect it to happen right now. So if you didn't know earlier, that's Bitcoin OG since 2012 that believes we're going to see a massive spike in the Bitcoin price. That's me, okay? And let me break down my case for you. And I'm talking about up to 620. I mean, this is just some assumptions that we're making, but they're logical assumptions if you ask me, right? So what are the investments that people make that potentially could, some of that money could flow into Bitcoin, right? So it's no longer a case of if Bitcoin is a sound investment or is it a good hedge or does it make sense. We see the most powerful institutions in the world now offering Bitcoin. We see the most powerful and largest asset management companies in the world offering Bitcoin and telling their money managers to offer Bitcoin to their clients. We see banks adopting it. We see countries adopting it. We see tens of billions of dollars being invested into Bitcoin infrastructure. People know where this is going. I knew where this was going in 2012 when I learned about it, but I had to be very cautious because people thought I was crazy. And this is why, I just don't want to hold back anymore. And yes, this might sound crazy, but in my opinion, this sounds logical. So assets that could send value into Bitcoin. So gold, for example, right? Gold's global market cap is 10 trillion. Fiat around the whole world is worth 80 trillion. Real estate around the whole globe, almost 282 trillion. Stocks, 90 trillion. Mutual funds, almost 18 million. Bonds, 100 trillion. So this is all trillions. Commodities, 20 trillion. For a grand total of almost $600 trillion in investments that potentially could have part of that investment flow into Bitcoin. Okay, and so what I first did is I just first made a general assumption, because now these money managers are saying put 1 to 5% of your portfolio in Bitcoin, right? I think that's conservative. I think that they're being conservative because it's still new and they don't want to be too risky because they're investment advisors but I think they're probably smart enough in putting 5, 10, 15, 20% of the portfolio into Bitcoin. But let's make the assumption that it's just 5% of all these assets that flow into Bitcoin. That would make Bitcoin's market cap $29 trillion, right? So how did I figure that out? I took 600 trillion times 5% gives me 30 trillion, right? 30 times 1 trillion. Now, the Bitcoin number, you'll see I have 16 million here. Why did I choose 16 million? Because we know that 21 million Bitcoin will ever be minted in mine, ever. And that's by 2140. So this number is probably even less. So we're talking about the actual true circulating supply of Bitcoin. Many, many, many people have made the guess that 5 or 6 million Bitcoin, between 4 to 6 million Bitcoin have been lost forever, right? So there's so many, I've met many people myself who said, oh yeah, in 2011, I mined 50,000 Bitcoin. You're like, holy shit, congratulations, dude. Wow, you're rich. He's like, no, I had it on an old laptop and the laptop, got wet and it was old anyway. So I threw it away and forgot about Bitcoin. And, in 2016, I saw that it was $1,000 and I thought, shit, I have 50,000 Bitcoin. Where's that laptop? And then could you imagine having 10,000, 50,000 Bitcoin that you once had in your possession? And because it wasn't worth hardly anything at the time, 2010, for example, 2011, that they just got lost. And there's a lot of stories like this, right? And people sometimes forget their private key or the recovery phrase. And those Bitcoin, I met tons of other people who were like, yeah, Kyle, like I went to go recover my Bitcoin wallet, and I realized that when I was backing up my mnemonic phrase, I only put 8 of the 12 words. Can you help me? I'm like, dude, I don't know. I mean, those Bitcoin are gone forever. So 16 million is the number I used. And how you figure out the price per Bitcoin is you divide the market cap by the circulating supply. So 29.965 trillion divided by 16 million gives you a price per Bitcoin of $1,872 and 813 cents, which, if you were to buy Bitcoin today at $9,225, would give you a 203 times multiple on your investment. Now, I'm gonna get a little bit more calculated here and think about which of these asset classes could potentially be disrupted a little bit more and why, or a little bit less and why. So gold, I put 50% of the gold value could easily flow into Bitcoin. Why? Because Bitcoin is a better store of value than gold, hands down. It is, if you have $100 million and you need to flee your country, how are you gonna take that on a plane? It's heavy, and people are going to know that you have it with you, right? But if you take $100 million in Bitcoin anywhere in the world, like, no one knows that you have it ever on any border ever, right? That's reason in itself to have it. It's private, mostly. If you need to pay for something in Bitcoin, I can pay for food in Bitcoin, I can pay for a car in Bitcoin, I can pay for a house in Bitcoin. It's very, very, very difficult to go to your grocery store or restaurant or bar and pay in gold. Like, what are you gonna do? Take a gold block and just start chipping off little bits of it and pay, like, and weigh it out? Then that's not convenient, is it? Bitcoin works as a currency. It works as a store of value. You can send it to anyone in the world without any intermediary for practically free. Someone transferred $1 billion in Bitcoin the other day, and the transaction fee was 48 cents. Good luck doing that with a bank. So fiat, 50%, right? So fiat, that makes sense, right? It just, with all the global situation, the money failing, makes sense that 50% of that value is going to flow into Bitcoin, right? World reserve currency. Real estate, 5%. People are always gonna think real estate's a good investment. It is a good long-term investment, so maybe a little bit more conservative at 5%. Stocks, I think a majority of stocks are gonna get disrupted, but not by Bitcoin, by digital security tokens. So 10% investments is reasonable for me to believe that 10% of stocks might flow into Bitcoin. Mutual funds, 20%. Bonds, 20%. Why? Because mutual funds are ridiculous. When I was younger, I put money into a mutual fund or a CD, certificate of deposit, to get a measly 3%. That doesn't even keep up with inflation, right? So, but there are older people in the next 10 years who won't be comfortable, so they're still gonna be in mutual funds and bonds, certificate of deposits, things like that. So I said 20%. And commodities. Commodities are things that people need to survive around the world, like coffee, sugar, corn, things like that. So people like investing in those things that the world's always going to need, and so I went to a conservative 3% on that. So if you add up the total here of what the total market cap is each of these asset classes, multiplied by my assumptions of potential flow into Bitcoin, you get a grand total of $92.22 trillion. So you take your $92.22 trillion market cap, divide that by 16 million Bitcoin to give you a total price of $5,763,750. A multiple of 625 times. Nothing else in your lifetime will offer you that. Nothing. So what does that look like for you? Okay, let me tell you, a $5,000 investment today at the Bitcoin price of 9225 gives you 0.54 Bitcoin. Now, if we look at the first number, the general 5% assumption, that 0.54 Bitcoin turns into $1.051 million. A 10,000 investment turns into $2.03 million. A $50,000 investment turns into $10.15 million. And a $100,000 investment turns into $20.3 million. Okay, now let's take the more calculated assumption that I made, which puts the Bitcoin price at $5,763,000 and $5,763,750. A $5,000 investment nets you $3.123 million. $10,000 investment, $6.247 million. $50,000 investment, $31,239,837. $100,000 investment, $62,479,675. Now maybe you're saying, like, Kyle, what if you're wrong? What if I am wrong? It's possible. But for this type of risk to return ratio, reward ratio, can you afford to lose $5,000? And how much does your life change if that $5,000 turns in from $1 million or $3 million? How long did it take you to save and earn that $5,000? What if it's $10,000? What if it's $50,000? What if it's $100,000? If you have $50,000, can you afford to lose it? Is that going to be the end of your life? Okay, if it is, then maybe be careful. But what this does is you have an incredible opportunity, because it's still early, to see gains that you could never, ever even imagine anywhere else, because this opportunity has never presented itself ever in history, ever, to us. And I don't know if it ever will in our lifetime. But people have been saying since 2012, I read the Bitcoin paper and I knew that all Bitcoin had to do was survive and it would be adopted. I knew it because it's such a better system. And as everybody starts to get it, they tell their friends, and then they get it, and they go in, and they tell 10 of their friends, and each of those 10 friends tell 10 of their friends, and so on and so on. And this is what we're seeing happen, not only on individuals, but institutions, with banks, with countries, everybody. It becomes obvious once you understand. All right, everybody, I hope you enjoyed the video today. Please, please share with everybody you know. Get this out there, get this information out there. It is exciting, and I need your help to grow this channel, to educate people. Like, subscribe, smash the bell. Please let me know what you want to see. Drop some comments down in the links below. Watch my previous videos. Share with everybody. Love you all. Cup, kup, mak, cup. Thank you so much. I gotta go to Mastermind. Bye-bye.